Welcome back everyone to the channel. Today we're diving deep into market phases and cycles, which is a crucial aspect of smart money concepts. Now, understanding these phases is vital for making informed trading decisions and effectively navigating the market. We're going to explore the three main market phases, which is accumulation, distribution, and reaccumulation/redistribution, and exactly how they relate to SMC or smart money concept. So it's key to remember that markets do not move in a straight line. They transition through different phases. By identifying these phases, we can better understand the market's overall context and align our trades accordingly. There are three primary market phases: the accumulation, the distribution, and then the reaccumulation and the redistribution. So let's break down each phase and how it ties into smart money concepts. So we start off with the accumulation phase. The accumulation phase occurs when the market consolidates after a downtrend. During this phase, smart money begins to accumulate assets at lower prices, setting the stage for a potential upward move. Now, here you can see I've displayed it. We have a huge downward move. We have this consolidation, which is the accumulation phase, and I'll go through how to find this. And then we have the huge pump up caused by this accumulation phase. So the key characteristics to spotting an accumulation phase is number one, low volatility. The market will have to experience some stable price fluctuations with a defined range, and often it will have no clear direction, and that is identified by low liquidity. We can see how big these candles are here during the distribution, which we're going to follow up on next. But you can see how big these candles are. There's so much volume in the market, there's so many traders, and they just keep getting bigger and bigger and bigger. Then here we have lower volume. These candles are much smaller. There's not a clear direction. We're just ranging slightly up, but overall no clear direction of where it's going. And this usually is our first characteristic of an accumulation phase. But we're not going in any clear direction. The candles are tiny. We have some big candles, but obviously they do not compare to anything like we see on the left here. The second characteristic is increased buying interest. As you can see here, the price stabilizes and smart money starts to accumulate these positions quietly, taking advantage of low prices. Now, the key thing to remember with smart money is that they're not going to accumulate in huge pumps like this. There's not enough liquidity at these low prices that smart money can just buy in with huge chunks of cash and cause these massive pumps in the market. They have to accumulate slowly and little by little at these lows before we see any price movement up. The third characteristic is that it builds liquidity. Liquidity is built up during this phase as the market prepares for a potential move in the opposite direction of the previous trend. So you can see here we have a downtrend, we build up some liquidity, we create highs, we create lows, and then the smart money accumulates, they clear that liquidity, and we begin the phase up. So how do we actually identify an accumulation phase? Well, there's two key ways: liquidity zones and volume trends. First off, we need to look for areas where liquidity is building, such as equal highs or lows that could serve as targets for smart money. We need to find key areas. Obviously on lower time frames there will be more. Here I'm on a higher time frame just for easier reasons, but yeah, create equal highs, clear liquidity, move back up. Volume trends. Whilst volume may decrease during this phase, a subtle increase in volume could indicate that smart money is beginning to take positions. Smart money has a lot more money than the average retail trader, so during these low volume phases in the market, if you're watching the volume and you can see some buying interest displayed on the volume, where you'll see a volume increase in buys, then it means smart money is buying. If you see an increase in sells, again, it will mean smart money is selling and that the accumulation phase has not yet begun. Now we move on to the distribution phase, which looks quite similar to the accumulation phase. It just looks like it's been flipped upside down. Now the distribution phase follows an uptrend and is characterized by smart money distributing their holdings. This phase often leads to a peak in price before potential downward trends begin. So you can see here, after an accumulation phase, we see a huge trend up, a distribution phase, and then a trend down. So again, there's three key characteristics for a distribution phase. Number one is price stagnation. Market prices begin to stagnate as smart money starts distributing their positions to less informed traders. Here we can see that the price really isn't moving. Similar to in the accumulation phase where the price doesn't really move in any sort of direction. Here the price will not move in any sort of directions. Again, we will have a slight uptrend, but overall we're still ranging like this. It starts to slowly stagnate And here you can see, obviously I'm on a higher time frame, but you'll see that the price overall will not be moving. The second key characteristic is the increased volatility. As the phase progresses, volatility may increase slightly as the market experiences indecision and more frequent price rejections. So the opposite of an accumulation phase, where there will be a decrease in volume, a distribution phase will have an increase in volume, usually because of FOMO. People are trying to buy as the price heads higher, while smart money is selling. There's going to be an increase in volume on the charts. You can see that the candles are still remaining quite large. There's still a lot of volume in the market. Again, you can use some sort of volume indicator to help you find that volume. And the third characteristic is the liquidity hunts. Smart money may push prices to clear liquidity, such as stop losses, before reversing the trend. Here you can see a high. We created a swing high, and again we did a swing high video previously, so make sure to check that out. It's the first ever lesson in the Smart Money Concepts playlist. But yeah, you can see here we create a high, we break past this high, clearing this liquidity because people are entering shorts, they're placing their stop losses above the high, and then we clear that liquidity. It allows smart money to sell more at these levels, because when traders' stop losses are getting hit from shorts, it means that the market is buying back up their positions, giving liquidity to smart money to sell. That then obviously allowed the push down to begin. Now, how do we identify a distribution phase? Well, there's two key ways again. First is liquidity grabs, and the second is order blocks. Again, we talked about liquidity grabs. Watch for sudden price movements designed to grab liquidity, often followed by a reversal. This right here is the best indication ever. We have a liquidity grab and the reversal begins. This means you should be looking for any sort of selling opportunities that you may find following your strategy. Next up, we have order blocks. So order blocks are created in the market. We're going to have a video on order blocks very soon. But yeah, an order block will be created. We hit the order block and we trend down. Next up, we have reaccumulation and redistribution phases. Now, these phases will occur after either the accumulation or distribution phase, and will serve as a continuational phase for the previous trend, or it can also prepare the market for a new trend. Now, the reaccumulation is usually after an initial uptrend, such as this one. We had the accumulation phase, and then we have the uptrend. Now, these reaccumulation phases essentially mean that smart money are reaccumulating positions, building liquidity for another leg higher. Here we can see there are two key reaccumulation phases, number one right here and number two right here. Now, a redistribution phase is quite similar to a reaccumulation, it's just flipped in the opposite direction. Following the uptrend, smart money might begin redistributing their assets, setting up the market for a continuational downtrend. Like here we have one redistribution phase, here we have another. We continuously get these redistribution and reaccumulation phases throughout the downtrend or uptrend. Now, how do we identify these phases? So for a reaccumulation phase, we need to look for a new buildup of liquidity and order blocks forming after a downtrend, indicating potential for a move up. So you can see here we had the initial move up, and then we get these small little downtrends in the market. These will usually allow for smart money to accumulate at the bottom of these downtrends before we head up higher. You can see we create liquidity such as equal lows, meaning that a lot of retail traders are going to be entering at these support areas, setting their stop losses below, and then their stop losses get hit, adds liquidity to smart money, they're able to buy up these dips, and then the market goes up. And then again, this happens continuously throughout the uptrend or downtrend. Then for the redistribution, it's quite similar. We need to observe for signs of smart money manipulating the market to clear liquidity before continuing the downtrend. So here, for example, we had some highs. You can see we cleared these highs. It gave the smart money liquidity to distribute their assets again, and we continued the downtrend. Now, how do we actually apply this to our trading and our trading decisions? Well, there's three key ways. The first one is accurate timing. Understanding these phases will help you a lot to understand your entries and exits more precisely, ensuring that your alignment is with the smart money's actions. You don't want to be selling, when smart money is accumulating at the lows, and you don't want to be buying when smart money is distributing at the highs. The second way is trend confirmations. Confirming the market phase before making any sort of trading decision will help you avoid being caught on the wrong side of the market, and it will also increase your trade's success probability and decrease your risk. So before entering any trade, you want to see whether you're in an accumulation phase distribution phase, or a reaccumulation or redistribution phase. Then you'll understand whether you're entering on the right side of the market. Third way is risk management. Applying appropriate risk management strategies based on the market phase to protect your trades, especially when smart money is likely to cause sharp movements. You don't want to be looking at equal lows and getting your buys in there because you think that it's a support level, having a stop loss below, and you don't want to become the liquidity. So thank you all for watching. Hopefully you understood market phases, the accumulation, the distribution, the reaccumulation, and the redistribution phases. It is really essential that you do understand these to help with your trading and your smart money concept strategies. If you did enjoy and you did find the video helpful, make sure to leave a like, subscribe, and hit the bell icon for more SMC trading tutorials. Thank you all for watching. Check out all the links down below as well. It will help out a lot, and I will see you all in the next week's trading tutorial. Goodbye, guys.